what happens is that any bullish opinion gets ridiculed. Bulls get ridiculed at near a bottom of a market.
If I have a sell signal on that day, I would only sell half of it and I would keep half. After 12 months, you are always in positive territory.
I think, and this is important because I think people think that capitulation means the exact bottom. That's not true. But I wonder, do you have any of your own opinion on capitulation on Bitcoin? All right, guys, welcome. So I'm joined here by Manuel Blay at the Dow Theory, the dowtheory.com. My question to you is on the subject of capitulation, because we all talk about capitulation. I mean, for those of you who may not be familiar with this term, I mean, essentially, this word comes about usually after a major crash or a major drop in the price. So, for example, when we saw the price of Bitcoin drop by 50%, you know, you hear this word a lot, capitulation. Have sellers given up yet? Have bears given up yet? I want to ask what you think about it. What does capitulation mean to you? How can we put it into something substantive, something that makes sense? What does it mean to you, capitulation?
Okay, first, it only applies to US stock indexes. It's been under research by Barshalik.
Do you mean the way you apply it as opposed to?
Exactly. So I can only talk of what I master. So for the time being, capitulation is a concept that has been more than proven with US stock indexes. So it means we have a drastic decline. The percentage divergence between the moving average is a 50 days moving average of the Dow Industrials, the S&P, and the NYSE, and the current price. Once this divergence reaches 10%, so for instance, if the moving average stands at 100 and your price is now 91 or something like that, so minus 10%, then if you get this reading on the three indexes, then normally a rebound, a new rally is at hand. It means it's very extreme. You only get, I think that from 1956, 57, when we began measuring capitulation, we only had 12 or 13 occurrences. So it happens very seldom. So maybe it's once every 4 or 5 years on average. So this is not a common occurrence. So but once it's like a rubber band. It's like a rubber band that is really pulled too much. Even though we are trend followers, because I would like to make this clear, we are trend followers. We normally don't catch falling knives. We are trend followers at heart. But sometimes exceptional, but we have to be good traders, not so dogmatic. We are trend followers, but first of all, we want to make money. So we are trend followers, but there is maybe 1% of the time to do mean reversion trading. And this is the occasion. When the rubber band is so stretched, then normally the odds favor a rebound. And we've measured that following capitulation, and I repeat, this is when the three indexes are 10% below the 50 days moving average. So can you imagine the 50-day moving average is going down? So it's going down, but I am 10% below this downward moving average. So this means a rubber band that is really totally stretched.
Right. Before you continue, the three indexes, once again, S&P, the Dow Industrials, am I right? And the New York Stock Exchange Composite, NYSE Composite, am I right?
Yes, yes.
Okay. If the price action is more than 10% away in distance from its 50 simple moving average, more than 10%, then you're reaching capitulation territory.
It's an extreme, and in all occurrences, after say 1 year, after 12 months, you are always in positive territory. You always
really? Whenever price gets that stretched away. So whenever price action is so stretched from its moving average, 50 simple moving average on those three indices, usually the next few months is positive, positive returns.
So you make exceptional returns. So this is the time first. If you get a sell signal, do not act on the sell signal, because then you are likely to be whipsawed. It's the time to hold. We had a simultaneous capitulation and a bear market definition, which is one of our alternative stop losses. And then, of course, it's contradictory. So then you don't act.
But you made a very important point. You said that if capitulation occurs at the same time as a bear market definition, let's say 16% drop or 20% drop, if people follow those bear market definitions, let's just say, so what you're saying is whatever bear market definition can be. If a bear market definition occurs, like break of structure or a 15 or 16 or 20% drop in the price, whatever bear market definition. If you have a bear market combined with capitulation, as you just said, what a capitulation is, then you can choose. You can choose to go with the capitulation and hold, as opposed to sell. You can hold. Yeah. So you don't have to actually get out. You can just hold because you're expecting a rebound, essentially. Isn't that right?
Exactly.
Right.
Exactly.
Interesting point. Very interesting point.
But basically, capitulation cancels out a sell signal, a stop loss.
Very good point. Very good point. Capitulation cancels out a bear market signal. And I should just say, there are risks involved here, and I'm sure people should remember this, because it's possible for the price to keep dropping even after a capitulation zone or signals being given. I think, and this is important, because I think people think that capitulation means the exact bottom. That's not true. Capitulation is just more of a territory or zone. It's almost near bottom, but it doesn't have. But price can keep dropping even after the capitulation signals being given.
On average, it is within, I think, 2% of the lows. So on average, 2020 was not.
Yeah.
But on average, on most of the occasions, you are really, and also we are 1 or 2 days off the final lows. We never go all in when we get capitulation. We go 50% invested. This is an important thing. So for instance, if I had, this is why I said partially cancels out. But it depends on your preference. It depends on your risk tolerance. I am very risk averse. Theoretically, one could be 100% invested on capitulation, but we did not do so because of risk aversion. Because what if one day capitulation fails and it continues going down, 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 down? And this is why we advise people to get invested 25, 50% on capitulation. But our tests say that if you had invested 100% on capitulation day, you would have made even more money. But this is a question of risk preference, risk aversion.
True.
It depends on each investor. So,
I agree with you.
Personally, I would never go more than 50% on capitulation. So this means if I have a sell signal on that day, I would only sell half of it and I would keep half. Those brave of heart, those very brave would say, no, it cancels out completely. So stop loss, capitulation, I hold. It depends on each one.
I agree.
It depends on each one.
I want to ask you, how can capitulation be applied to something like Bitcoin? Because we discussed the 3 markets like S&P, the Dow, and the NYSE Composite. How can we apply it, do you think, to something like Bitcoin? Now, obviously, it's not going to be like the same as the stock markets, but do you have any ideas? One of my own ideas, I don't know what you think, but one of my own ideas, as I noticed, is usually I think of capitulation in Bitcoin and crypto as a point where first of all, you need extreme pessimism in sentiment. So I look for extreme pessimism, usually when almost everybody just keeps giving up and just, you see, first of all, you need a major volatile crash and drop, but also you need the sentiment to turn against Bitcoin to the extent that just practically people turn bearish. So usually look at sentiment indicators as a good example of this. I think we had some sentiment indicators suggesting we had some capitulation. It doesn't necessarily mean it's the bottom, but at least the point of a near reversal in Bitcoin. I think we reached that sometime in April, May. But I wonder, do you have any of your own opinion on capitulation on Bitcoin, for example? Sometimes I think of spikes, like a major spike in the price as an example. Like, for example, when Bitcoin spiked down, I think we saw a spike from something like, I don't know where it was, from 40,000 or 35,000 to 30,000, like a spike in the price action. Yeah, boom. And then a quick drop back. That can often be something we can see in near capitulation zones. Do you have any ideas of your own on Bitcoin?
I've got one.
Yeah.
Yes. Once again, I think we should adapt. So the 10% difference between the average and the current price, this was for stocks because they have a given volatility, but Bitcoin. So I think, and this is what I am currently researching, we should adjust for volatility. But in this case, I would adjust for the ATR, the average true range. Maybe you have heard of that as trader.
Yeah.
So there is that the daily range, so high low of a stock, so the open, close, high, low. So this is a daily range. So there is the true range. So we take the average true range, and I would play some kind of multiple. So for instance, with US stocks, capitulation means more or less 20 average true range distance from the moving average and the current price. The average volatility is 0.5% for the S&P. So more or less, when I say that capitulation means a distance of 10% between the current closing price and the moving average, for instance, Bitcoin, which is more or less 9 times more volatile, I guess it has also 9 times the average range, then we had to perform an adjustment. But if you talk about average true ranges, you get rid of percentage, which can get very tricky when volatilities are so different, like stocks and Bitcoins. And this is an important point, I insist. Because of course, if we consider percentages, and Bitcoin is 9 times more volatile than US stocks, we have a problem. But on the other hand, an ATR multiple is always an ATR multiple. I research a lot that also for my own trading, my stop losses in trading. But this is research. This is nothing final. But what I am seeing, for instance, is that capitulation for US stocks would be a 20 ATR distance between the moving average and the current price. Our daily volatility is 0.5%. So more or less, it seems that for other markets, something in the vicinity of a distance of 20 ATRs would work. But I repeat, this is under research, so I cannot be as sure as I am, because with US stock indexes, in the subscriber, you can see in the subscribers area, there is lots of research, lots. So it's been more than research.
So you're just looking at the volatility and the average true range, the distance. So how much Bitcoin drops relative to its average true range could be a good indication.
Exactly, because
of capitulation. Yeah. That's a very interesting point. Thanks for that, Manuel. Something we know about about capitulation is that near when capitulation zone is reaching, or shall we say near the pessimistic extreme, when you're reaching an extreme in pessimism, extreme in negativity, which is a contrary indication, you get, what happens is that any bullish opinion gets ridiculed. Bulls get ridiculed at near a bottom of a market. So one way you can know if you're reaching a bottom in a market or a turning point is when bulls, or anyone who has a bullish opinion, they get absolutely ridiculed and they get, they get trashed. Thanks very much, Manuel. I appreciate it. Hopefully see you in the next video.